We continue our review of 2017, and tonight we're focusing on infrastructure development. With a towering infrastructure deficit of more than $2 trillion, experts are advocating for public-private partnership. They believe that's the way to go. This suggestion is coming in spite of the increased budgetary allocation for capital projects by the present administration. Our correspondent Chris Alems takes a look at how infrastructure fared in the outgoing year.
The state of infrastructure such as road, airport, railway, maritime, health centers, schools, power supply define the status of any nation. With growing population figure put at over 180 million and a disproportionate growth in budgetary spending on capital projects, Nigeria's over the years witnessed a huge infrastructure deficit, which experts believe would require over $100 billion within the next 6 years to shore up.
It is being on record in the last few years that government and other, infrastructure-focused institutions and authority in Nigeria, including the private sector, we collectively might have been spending maybe about $10 billion. So it means that we have a gap increasingly that is hovering around $15 billion or plus.
The effect of the deficit has left over 60% of the country's estimated 200,000 kilometers of road network in bad shape. Electricity generation abysmally low. However, in the last 2 years, the present administration has increased budgetary spending in order to bridge the gap. This, according to some infrastructure experts, might not be enough.
Federal government need to fund infrastructure development bank. They need to empower ICRC, Infrastructure Concession Regulatory Commission. They need to empower them. And MDAs, they need to change the narrative by seeing PPP as the way to go, because budgetary allocation is not enough.
Government has been trying increasingly in the last 5 years to increase budgetary allocation to infrastructure. It will have been impactful, assuming we began to plan before the population exploded, so that as each year we add more to the number of infrastructure that is available than the number of people and the users of the infrastructure. But we have lost time, allow demand to build up, that whatever we then make available on an annual basis look insignificant.
The road to recovery appears to have been set in motion as the nation's capacity to generate power hits 7,000 megawatts, though issues on distribution are still pending. Furthermore, the success of the 100 billion naira Sukuk bond project means more roads are to be fixed. If the estimated housing sector deficit, put at over 17 million, is anything to go by, the task of fixing this is obviously daunting, as it would require at least 500 units annually for the next 35 years. The minister says this too is being tackled.
It's a national housing program to test the design for two things around which previous housing initiatives have floundered: for acceptability by the citizens. There are empty houses that people don't like because they were not consulted when it was built. To also test it for affordability. There are also houses that some people like, they can't afford it.
As the country looks forward to playing in the league of top 20 economies in no distant future, whatever this would require must be given the desired attention. Chris Alems, Channels Television News.
To examine this issue further, I'm now being joined by Dr. Francis Ojadi from the Lagos Business School. You're welcome to the News at 10.
Thank you, Melina.
Now let's begin by looking at the state of infrastructure in Nigeria. What's your assessment?
Well, you can't really say that infrastructure, the state of infrastructure at this point is practically zero. It's not. It's always better to have half of the cup rather than have an empty cup. But what is important is that efforts have been done to try to really build up and then take off from where the previous administration stopped, particularly with respect to abandoned projects in infrastructure areas, to try to bring them up to speed and then be able to get to a point where you can comfortably say, yes, we have just gotten to a point where infrastructure is in a position to help really the growth, the economic growth. At the moment, if you look at the road infrastructure, it's all a tale of woes. But also, if you look at what the present administration is trying to do, they've really gone on to the extent of really trying to use data to drive road infrastructure development. And to that extent, you've had this Sukuk fund they talked about earmarked for a couple of roads in the geopolitical zones. And also you have the roads now completely classified according to economic corridors, agric roads, and so on and so forth. So you can better focus on them and try to drive and improve on these activities. Now, what has happened is simply that when you maintain the roads and then you put them in top gear, over time they tend to wear away. But not much question is really asked as to why this is so. So in the end, you have a cumulative effect of very degraded road that you now have to spend a lot of money to begin to really get them back to shape.
Should have
So maintenance becomes a very key issue. But beyond that, we need to also worry about what we call the axle load of cargo or trucks that really ply this road. No one is looking at those.
So there should be
some form of really trying to check on this to ensure that when you put up a road, then that road naturally should last the test of time before you then begin to talk about refitting it again.
But most of them don't have enough alternatives besides the roads. The rail lines are not enough.
That is all the more reason why you have this emphasis and this attention on roads, which means simply that we also need to think of moving the bulk of the road to the rail. And I think the government is beginning to look at that in the present circumstances. I was quite thrilled when they talked about the thing of linking up the Tinkan Island port to the rail, because it's only the Papa port that has a rail. So that means you can move things easily by rail through the Tinkan Island port. But beyond that, that is an aspect that we need to pay particular attention to. I'll give an example. A typical locomotive that pulls about 17 containers means he is taking away 17 trucks from the road. So there is need for us to begin to ship. Now, one other interesting feature is the fact that we can't continue with this asphalt material for building roads. It is either we improve or increase on the design capabilities of this road using asphalt, or we try and move or shift to concrete. Concrete tends to have a far more better resilience in terms of really helping the roads sustain the heavy loads. But I think more importantly that these three things, we should look at them. First, begin to look at ways to move the bulk of the load from the road to the rail, and at the same time begin to think of really changing the specifications, or perhaps really move into using concrete to try to drive the road. But more importantly, the axle load of vehicles should now draw the attention of those that are concerned with maintaining the roads.
Well, the federal government cannot do it alone, so the role of the private sector cannot be overemphasized in helping to ease the burden. But how can the government attract the private sector to invest in this sector?
Very interesting. They need to really come up with incentives that will drive the private. The private sector essentially looks at profit.
Yes.
And now that we're also thinking and talking about the social corporate responsibility and code, they're not going to really be left out in that respect. But importantly, they are really profit-oriented, and therefore you need to come up with incentives that would really drive them to get into the stream of things and help develop these roads. Now, there is this added problem of once you do that, one way the private sector recoups their investment is by tolling. So when you toll, the citizens of the country will also have to pay.
Yeah, they feel the pinch.
And the question will be, come on, we are paying taxes and all that, so why pay this pinch? I tend to support that, because if you do not, then it means that the entire responsibility and funding will now be on the government.
Okay, Dr. Ojadi, let's quickly take a look at the housing sector. It's no longer news that it's not available, and well, the government intends to achieve that long-desired goal of housing for all. Do you think it's a tall order?
Yes, the government can achieve that not by building houses themselves. Again, it means you have to really change what you used to do in the past. And I think there are some indications that they're beginning to toe this line. For instance, if you recall, the Minister for Mines, Power and
Works and Housing
actually mentioned the National Housing Program. That program is actually to really test the prototype, to test the type of houses that people need. And I think it's in the right direction. Once that is done and established, then the next thing is to revamp and fund the federal mortgage banks to try to come in and then get these things going. So you can now take out a mortgage for over 20, 25 years. And young guys like the people you see on the streets these days, just getting employment and so on, can now own a house and then pay over time. To try to really achieve that.
Thank you so much, Dr. Francis Ojadi from the Lagos Business School for speaking with us tonight.
Right. Thank you.
Other states have also presented their 2018 budget and has the details on Business News.
You first. First Bank.
Thanks a lot, Melinda, and welcome to Business News. The governors of Borno, Bauchi and Enugu State have presented their budget proposal for the 2018 fiscal year to their state houses of assembly. The governor of Bauchi State, Mr. Mohammed Abubakar, presented a 167 billion naira budget, tagged Budget of Consolidation, targeted at completing ongoing projects in the state. Enugu State Governor Ifeanyi Ugwuanyi presented a budget of 98.56 billion naira, tagged Budget of Sustainable Economic Growth. And Borno State Governor Kashim Shettima presented a budget of 170.2 billion naira, titled Budget of Resettlement and Empowerment, with education getting the highest amount at 27 billion naira. Traders at the currencies market expect the naira to remain stable next week, despite the slow holiday trading. This follows expectations of the regular forex intervention by the central bank through the injection of dollars into the market. The currency has been hovering around 360 naira per dollar, but today at the official market, the local currency unit was quoted at 306.05 against the dollar. Investors at the local equities market replaced the profit taking recorded in yesterday's session with demands for stocks across 5 major counters as traders look forward to the final trading session for 2017, and that will happen tomorrow. Emma Namawe tells us more.
Hello and welcome to the Stock Market Report. The local equities market got a quick rebound at the close of Thursday's trading on the back of bargain hunting across the 5 major sectors of the NSE. The positive sentiment, particularly from the consumer goods sector, drove the all-share index up marginally by 0.27%, while 136 billion naira was added to the market's total value. 25 price gainers were led by the shares of Qtix, Total and Double One, while 8 decliners were led by losses from Linkage Assurance, Honeywell and Livestock Feeds. For a second session this week, TransCore is the most actively traded stock by investors as it contributed 100.55 million units to a total turnover of 322.39 million shares traded in 3,354 transactions. And that's it on the Stock Market Report. I'm Emana Amawe.
As financial markets across the world prepare for the final trading hours of 2017, major global bourses have ended the day slightly mixed with light volume of transactions. Here is a snapshot of the closing numbers. That's business news for tonight. Thank you for watching. I'm Anne Nwawado. The rest of the news continues now with Melinda.
You first. First Bank.
Still ahead on the news at 10, Anthony Joshua and Joseph Parker are set to have a heavyweight unification fight after a deal was reached on how to split the proceeds. That's on Sports News. Stay with us.